Hello, guys. This is a pre-market analysis of 14th of May, and we need to discuss three important areas today. So there are positives, there are negatives, and when it comes to Indian markets, there are more negatives that is still continuing. But at the same time, we are expecting a 100-point gap up after four sessions of sell-off, massive, 1,200-point sell-off we have seen for the last 4 days. And today we may be getting a gap up of 100 point. And if that is sustaining, then it will be good. If it sustain above that 23,500 mark, it can go till 23,800. And that's exactly what we are actually looking for. If that happens, some kind of recovery is what we are looking for. And globally, the situation is at the moment okay. Oil is slightly cooling off, and there are some optimism which is coming also. So again, there is a issue that is US inflation, and Trump have given clarification for that also. So we will be discussing all these. So US wholesale inflation data we will look at, because that is important. That came as high in the month of April, and it's a new financial year, and the first month of that new financial year actually decide the trend. But this is something which is an exception because of the war. This is could be the reason. Oil price is the reason for this inflation. Okay, now again, Trump and Xi, the meeting, that also bringing some optimism. And let's see this gap up which we are going to get today. So overall, even though macro concerns still remain, all those war issues, oil issues, our market rupee depreciation issues, and forex issues and everything, but market sentiment, if you see over the last night, okay, has slightly improved because of the optimism around this US China talks and this tech, that is AI and mega, cap tech rally. If you see yesterday US market, we have seen that. So we may see some good recovery in the IT today. Okay, but AI and IT, that is entirely, we cannot connect it, but tech related stock, in that way we can connect it. And slight cooling of oil prices around 1%, 2% we have seen yesterday dip. So these are the things that we need to discuss. If you look at inflation, US consumer inflation, yesterday we have discussed, already came higher than expected, not good. And yesterday, if you see wholesale inflation, see, inflation we calculate at three levels. Consumer, that means at our level, consumer side, right? That is a CPI. And then wholesale price inflation, that is at the wholesaler level. And then there is one more, that is at the producer level, that is PPI, producer price inflation. So wholesale inflation, retail inflation, that is what consumer inflation, and then producer inflation. Now all these have different impact and significance. And when we look at RBI, earlier RBI used to make policies based on WPI, but now CPI, because they're taking into consideration what is the actual impact on the customer. But when it comes to the consumer, you see, inflation depends upon many other aspects also, like producer, the production is done, then a lot of things are involved, transportation, middleman cost, and etc. So this may not give you the actual picture. Wholesale price also may not give you the real picture, but producer price inflation, that will actually give you, at the production level, what is the inflation? At the wholesale level, what is the inflation? At the consumer level, what is the inflation? So yesterday we discussed about CPI, consumer level. Today, if you look at wholesale price inflation, and that is significantly higher than expected, and it's 6%. It's much higher than the Fed's target also. Target is 2%, and I've told you it is very less when it comes to US market, whether it is interest rate or growth or inflation. Their target and the percent, because the base is high. So for example, in India, the RBI target is 4%. Here it is half of it only. For developed countries like US, Japan, etc., the interest rates and the growth, and these will be very less. Okay. Now, if you look at core PPI, that means you exclude food and fuel. These are volatile item. Then also it comes around 5.2%. That is also very high. So if you see, it is increasing more than 1% over the month, and that's mainly because of this, war and the increasing oil price only. But it's definitely not good for the US market. Another positive trigger for the market is, despite all these bad inflation, US market has become optimistic because of Trump meeting with Xi. Okay, Trump have reached China, and during the Indian market hours also, Trump scheduled to meet Chinese President Jinping, and there are other people also who are visiting that, like Nvidia CEO, Apple representatives, Tesla representatives also visited China along with Trump. So because of that, these stocks also did very well. And the way market is interpreting us, it is very good and positive for AI and tech sectors. That's why you have seen a massive rally on AI and tech sectors yesterday. Right. So what market is actually hoping for is there are official discussions about trade, Taiwan, but markets are more interested in whether China can help to resolve the US-Iran issue. Now, why China is important? China is one of the biggest buyers of Iranian crude oil. So what market is expecting is China may become a better mediator than Pakistan. So the Trump visit to China also may be because Trump wants China to mediate this. So all this will come to know later. And because of this optimism, because of this talk, right, China, US, and also because of that itself, oil price have slightly cooled off because of this optimism. There is a geopolitical hope which is coming. So if you look at the current price, it's Brent is near 106. Yesterday it was 108. WTI is around 101, still above 100, above the psychological level, but better than last day. So compared to Tuesday night, right, it cooled slightly. Because of that, market is looking something optimistic. Okay, so we got a recovery in US market also yesterday, and we are going to get a gap up in Indian market also. And yesterday, if you see US market, mega cap and AI tech stocks, they did very well. And Dow Jones closed slightly negative only, despite all these inflation drama and everything. It's around zero point 0.1, minus zero point 0.1. S&P is positive, fresh all-time high, 0.6%. Nasdaq 1.2 because tech stocks and everything was rallying. VIX there is no much change, no major change, and market is looking stable according to this. So GIFT Nifty is now around 23 570 level. So that could be a 100-point gap up opening if you connect it with the Indian market. So, see, despite inflation stock, despite the fact that oil is above 100, our market sentiment is also improving. US market sentiment is improved, and we are going to get a gap up if that's sustained because we already priced in so much negativity. In the last 4 days, every day we were falling 380, 380, 400 points, right? So, yesterday at one point, we have seen 300-point plus recovery also. Now, if you look at Indian ADRs, Indian banking ADRs are still negative. In fact, slightly more negative than Indian market HDFC ADR and ICICI Bank also. If you see it's negative to flat, flat with negative bias. Wipro ADR, I don't know, for the last 4 or 5 days, it's consistently negative, more than 2% negative. Infosys ADR, it's almost in line with the Indian market. So, see, some stock specific weaknesses there. But ADRs is not matching with GIFT Nifty optimism and the way GIFT Nifty is moving. ADR, for example, this Wipro, HDFC are even negative than Indian market, right? But still, GIFT Nifty is looking good. Let's see whether the gap up will sustain or not. That will be more important. Now, yeah. Another update is that Iran officially confirmed they are planning to charge service fees for the ships which is passing through Strait of Hormuz. That is another thing which is going to come up in the upcoming days. And only selected ships will be allowed the passage through Strait of Hormuz. This is from Iran's side. And the India specific positive here is that Iran confirmed already allowed 11 India ships to pass through the Strait of Hormuz during this scenario, and more vessels are under approval. So that is again, if you look at Indian side, that Iran is allowing Indian ships to pass through, that means slightly positive compared to the Western countries because we have significant investment in Iran. We have very good, rapport with Iran, and we are importing huge crude oil from Iran. Iran's Chabar port is constructed by us only. So, because of all this, Iran slightly tilted towards India, and that is actually positive for India. But new escalation is again there. Kuwait attacking Iran. So that again is not looking good. Iran foreign minister also said Iran reserves right to respond. So we don't know what is going to happen. Right. And then there is a transportation uncertainty, which is still continuing. All these are there in the air, but there are some positivity also. All these are priced in the market for, it's almost 2 months we are listening to this. Even we have seen more attacks and market went to 20 to 500 levels and all those. So as of now, these are the things that we need to look at, focus on. And institutional data, if you see, FIIs were net sellers yesterday also, almost 5,000 crore, 4,700 crore they sold, but DIIs bought massively, close to 7,000 crore. and DIAs is supporting continuously, strongly. To what extent DIAs will pump this kind of money, no one know. And if you look at open interest, it could be expiry impact. Expiry was last day, but still huge amount of call unwinding, 41% call unwinding. Could be because of that up move which you got. And after the expiry, 41% unwounded and newly added 16.5. So compared to the unwinding, addition is very less. That is actually positive. And if you look at put side, 31% unwinding is there, but addition 18%. See the difference. Call side 41% is gone, but fresh addition is 16.5 only. But put side 31% is gone, which means earlier it was less. That means negative, but that is gone and more added. So now if you see the put call ratio scenario PCR, it increased 0.89 to 0.91, which is slightly positive. Though if it is 1, it is neutral. Anything below 1, it is negative. Anything above 1, it is positive. It is still below 1, it is negative, but it is coming from more negative to less negative. 0.89 to 0.91. Yesterday, 0.7 it was and came to 0.81. Now it is better, right? It is slightly improved. I hope you're getting these points. I don't know how many of you know these, but even if you don't know, no issue. You just need to understand these are the things that you need to keep in mind. You don't want to know the exact technicals because you're not going to become a data analyst or you're not going to write the exam or anything, right? You just want to trade and you just need to trade the price. Look at the chart, have this understanding and trade the price. So yesterday, if you see market opened flat and it was completely range bound. It was between R3 and S3 Camarilla pivot and got a beautiful close above 23,400. That's better. But at one point, we have seen a recovery from day's low to day's high, almost 300 point. A small bullish candle, but long upper shadow. From the upside, you're getting selling. From lower side, you're getting buying also. Selling pressure and buying also is there. So still below all the key moving averages. Trend is on the downside. RSI is still below 40. Okay. Important level now is 23,400. They need to stay above that. But I'm looking for a opening around 23,500, maybe slightly above 500. If they sustain, it will be good. Then can move to 23,600, 700, 800 is the next major resistance. Okay. Now, if 23,400 fails, it can still come to 23,200. Just like yesterday, they almost came till 23,250. Very much possible. But now there is no reason why market need to come to yesterday's low, right? That negativity. Yesterday, what we had, yesterday and day before, that Prime Minister also had some negative discussions, right? The caution, I won't say negative discussion, that's there, but that much negativity is not there. So there is no reason that it can go to 23,200. Possibility is that it can go sideways or it can give a recovery. That kind of fall we may not see. Bank Nifty also, we have seen some small gap up and it was a range bound session. So if you see Bank Nifty, 53,000 is a support, 53,900, 54,000 is a resistance. Open interest, call side still maximum at that 24,000 and then 23,500. These are straddle people. Then 23,800. Put side 23,000 and then 23,500. That's straddle people. Then 23,400, 23,200. So bigger range is 23,000 to 24,000. Our tighter, smaller range will be 23,200. That is close to yesterday's low, which is 23,250, 200 to 23,800. That's a 600 point range. So overall, US inflation is very high. That is a risk. Okay, inflation risk is there. Across the country, it is there. In our market also, we have seen every country is now feeling the pressure of the war, heat of the war. So inflation will definitely be there. That is mainly driven by the oil price. So that is why Trump told yesterday, once war is over, markets are going to skyrocket, inflation is going to come down, interest rate are going to be reduced and all those, right? So the optimism is that China, US talk and AI tech rally, cooling off in oil, all these are positive. But concerns are rupee is still weaken, FIIs are still selling, Iran uncertainty is there, Kuwait attacking Iran is there, oil is above 100. So market is attempting for a technical recovery, a kind of dead cat bounce, but macro risk is still remaining high. So focus on this 23,400 level and any news based move also. So that's about the session. Thank you so much. If you would like to learn things in the live market, we have the live market mentoring sessions and the demo videos and everything is available in YouTube. You can get in touch with our team if you want to attend a session or if you want to join us for the program. See you there. Thank you.